Hello and welcome to another Smaulgld live stream. It is Saturday the 18th of May 2019 and it is Saturday night silver with Smaulgld. In tonight's episode, among other things, commercials about to go long again as the gold silver ratio hits 89-1. Welcome to Saturday night silver with Smaulgld. We have two other such programs focusing single topic. Tonight we're going to talk about silver. Tomorrow night will be Solid Gold Sunday with Smaulgld, and last night, Friday night, we had Friday night crypto with Smaulgld. So tonight we're going to take a dive into what's going on in the silver markets. We're going to take a look at the four major mints and their sales, their silver sales. We're going to take a look at the commitment of traders on the Comex. We're going to take a look at the gold silver ratio, the owners per ounce on the Comex as it relates to the trading volume. We're going to look at the inflows into and the outflows in the Comex warehouses, including JP Morgan's. And we'll get an update on the silver ETFs and other custodial amounts of silver that are being held, well over 1 billion ounces right now. And we'll take a look at the silver premiums on American Silver Eagles. All right, let's start off with taking a look at the mints. I'm going to pull up some charts for you, and we're going to discuss just silver. If you have any questions, I'll get to them at the end of the program. If you want my attention on a particular point, just put SMEULGLD in the comments, and I'll be able to see your comment a lot clearer. If you do not want my attention, you carry on discussing things amongst yourselves, that's fine too. Okay, let's take a look at the U.S. Mint and the American Silver Eagle. Now, the last few years have not been very good for the American Silver Eagle. We hit a peak in sales in 2015, and it's been on a steady decline since. And it looks like this year through May, it may even continue to decline further. But let's take a look at just an overview of American Silver Eagle sales since 1986. And I like to show this chart because it does show that when the financial crisis hit in 2008, that you did get an uptick in silver sales, and that golden era of silver sales lasted to about 2016, the middle of the year. And then you can see in 2017 and 18 it fell off in half pretty much in 2017 from 2016, basically from 37.7 million in 2016 all the way down to 18 million in 2017, and last year 2018 down to 15.7 million. It looked like this year silver sales were going to do a lot better, perhaps getting in the 20s again, and we had a very strong January and then a strong start to February, and then the U.S. Mint curtailed sales due to a silver planchet shortage. They resumed sales, but the sales have not picked up, and through May, they're not reflected on the chart. Yes, they are. 8.281,000, and that reflects only 160,000 sold in May through the 18th or the 17th. They don't report today, the U.S. Mint of May. So there are your American Silver Eagle sales. All of the charts are available on Smaulgld.com the next day for you to look at. A lot easier to see them sometimes and without having to pause the video to take a look closer at a chart. And here's just another example of, if you take the sales of the first 4 months of the year from 2015, 16, 17, 18, and 19, and you can see January was not a bad year. It was better than 2018 this year. You can see the 4.175 million sold, and also February was a decent month as well. It was the best since 2016 with 2.15 million American Silver Eagle sold, but then you can see we moved down from there lower than even 2018. Again, you can look at these charts on Smaulgld.com if you want to take a closer look. I'm not trying to rush you through them. We have a lot of charts to take a look at. Now, also, what's very important is how much money is actually spent on these American Silver Eagle. So I'm going to show you a chart prepared by Nick Laird where he calculates the value of the Silver Eagle sold versus the value of the gold sold at the U.S. Mint. And if you're following along on the screen, the gold line is the gold sales and the dollar value and in millions of dollars, and the silver line is the silver sales. And last month, meaning in April, the U.S. Mint sold about $18 million worth of silver. That's a very low number due to two reasons. It's a low number in actual volume of silver sold, but also because the price is down around $14, $15. Gold sales also very low, and less a function of a low gold price, because the gold price has been around $1,250, $1,300 for the past couple of years, but the gold sales have been really small. Again, you could take a look at this chart in more detail. It's hard to see on the screen here on the Smaulgld website tomorrow, so please check that out. But here is the Silver Eagle to 1 ounce Gold Eagle sales. This is not the gold silver ratio on price. This is how many American 1 ounce Silver Eagles the U.S. Mint sells versus 1 ounce American Gold Eagles. And you can see it's 82 to 1 now in 2018. When it's 82 to 1, that sounds very high, and it is a high ratio, but it's high mostly because, well, not mostly, but because they're selling 82 times more silver than gold, but the silver sales are low, which means that the gold sales are really low for you to get that 82 ratio. Now, in 2014, when the ratio was 106 to 1, that was a very high ratio, but both the gold and the silver sales were elevated. So it was showing strong silver interest. And try to keep this chart in mind. And again, tomorrow you can go check it out on the site. But let's take a look at what this means in dollar terms, how much money people are spending on Silver Eagles versus how much money they are spending on Gold Eagles. Now, it's a little hard to look at again on a monthly basis here, but you could see some months in 2015 and 16, U.S. Mint selling almost a quarter of $1 billion, over $220 million worth of gold. And the highest ever got on silver looks like in 2015, there was a couple of months where they sold about $90 million. I know it's hard to see on this chart, so let's move out to a annualized chart of gold and silver dollar value. And now you can see the amounts being spent this year so far through April. $129 million worth of silver and only $185 million worth of gold. Contrast that back to 2011, 2010, where the U.S. Mint sold $1.758 billion worth of gold, $1.832 billion worth of gold in 2011. And then the peak silver, not the peak silver sales in volume, was in 2011, because remember the price was very expensive in 2011 for a good portion of the year. They sold $1.464 billion worth of silver. Now in 2015, which was the year they sold the record amount, that was only $744 million worth of silver. So even though in 2015 they sold, 47 million, and in 2011 they sold, I don't know, it was like 40, no, it wasn't even 40 million in 2011. I think it was, it was 39 million. So you could see that there. They sold more in 2015 than they did in 2011, but only half the dollar amount because the price of silver had collapsed. But that also led to the increase in the silver sales. As you can see, they've moved up. But now you have not only a lower silver price, but you also have drastically lower silver sales. So you went from 40 million about in 2011, and that was worth $1.46 billion, all the way down to now we're about 8.2 million instead of 40 million in sales. And because the price is so low, we're down to $129 million worth sold. So it's over a 90% drop in the amount of money that people are spending on Silver Eagles. That's a very, very significant point there, because even though in 2015 the price, the dollar value was lower, it still reflected large volume because people were taking advantage of the low price. But right now, the low price doesn't seem to be driving dollar sales or volume sales at all. All right, let's see what else we have on the U.S. Mint before we move on. So the Canadian Mint's a bit different. One other chart on the Silver Eagles. It's a premium chart I've been keeping, but it's really not much of a difference lately. Last few years, the premiums just tend to go up slightly at the end of the year for current dated coins, just because they don't order anymore that year and they're focused on getting rid of inventory, and sometimes they run out, and so the bullion dealers jack up the price on current year coins, and then they sell the next year coin at a slightly lower premium. But nothing really to keep in mind there. We are going to take a look. We might as well take a look at it now. The premium chart and what happens at the different prices. This is specific to American Silver Eagles because they have the highest premiums. Before we move on to Canadian Maple Leafs, the Sovereign Coins, Austrian Silver Philharmonics, and the Perth Mint Silver Coins, there is a $2 per coin surcharge that the U.S. Mint charges to authorized purchasers. And as a result, when you buy new Silver Eagles, you're going to pay at least $2.25, because the authorized purchaser is either going to sell them to you directly, which would only be, I think, the case of Comex. The rest of the authorized purchasers don't sell retail, and they sell to the bullion dealers like SD Bullion, Money Metals Exchange, Golden Eagle Coins, BJSC, all the online Provident Metals, Gainesville Coins. They buy from authorized purchasers, and of course they have to mark up. They get charged over $2, and then they have to mark it up in order to stay in business. So what this chart shows, and again, it's a good chart to keep handy because it goes in increments of $5, what happens to your premium. But right now is a good one where it says if the price of silver is $15 an ounce, well, the U.S. Mint is going to charge, doesn't matter. They don't care whether the price is $2 an ounce or $20 an ounce or $200 an ounce. They charge $2 per coin to the authorized purchasers. So if it was $2 an ounce for silver, you'd have to pay $4 at a minimum for a coin, so it would be a 100% markup. It's a fabrication charge. I don't know why it has to be that high, but that's the way it is. Now, at $15, which is where we are today, or even lower, a $2 premium, which you're not going to get, not on newly dated coins. You might get something like that on the older coins from a dealer. That's already a 13% premium, which means the price of silver has to rise 13% before you even start to think about breaking even, but you won't, because when you sell, you don't get the premium back, you get about half of it. And that's assuming the coins are in BU condition. But generally, what a dealer is going to do is probably going to sell you current dated year coins at 50 cents over spot. Over the $2 premium. So you're going to pay 15, 16, 17, 17.50. You're going to pay 17.50. Well, that reflects a 16 2/3% premium. And if you end up paying $3 over spot, if you pay $18 with shipping, you're talking about 20% on your American Silver Eagles, which makes the American Silver Eagle probably the least attractive, unless you're just collecting current year dated coins, the least attractive of all the silver when the price is low. Now, when the price is higher, it's less important. So when the price is $35 an ounce, you're looking at single-digit percentage premiums, which isn't going to break the bank. But if you're going to pay a current year coin, and you're going to pay essentially with shipping a 20% premium on the coin, the price can go up to $18, $19, and you're not going to make any money. Just a point to keep out. I like to keep this chart handy because the other mints don't charge these types of premiums. The reason that the U.S. Mint premium is problematic is because it's $2 per coin to authorized purchasers no matter what, and the other premiums are lower. Well, let's move on now to Canadian Mint. Now keep in mind the U.S. Mint sold last year, 2018, 15.7 million ounces of silver, or 15.7 million 1 ounce American Silver Eagles. They also sold a few America the Beautiful coins, but we're only focused on the American Silver Eagles. But let's take a look at what the Canadian Mint's been doing. Canadian Mint has not done as poorly in terms of a drop-off in their silver sales. They had a bit of an issue. They had a record year in 2015 as well, but they had to restate a lot of their financials because they also offered these coins, which were face value coins of $20, but they only had like a quarter of an ounce of silver, and they seemed to be a good hedge because the price, they didn't have $20 worth of silver in them, but they had a face value worth of $20. And they had made an arrangement, if you bought them, you could bring them back to the bank and they give you your $20 for them, and a lot of people did that. So all those silver sales that went out the door in the $20 coins, they had to deduct from their silver sales. Didn't work out. I actually thought it was a good idea, because if you can get a $20 bill in Canada, I mean, if I lived there, if I were to go get $100, if you were, instead of getting $100 in Canadian bills, you get $100 in Canadian coins, and you'd have about $20, $25 worth of silver in all those coins. Now, you'd still only have 100 Canadian dollars, and the silver content would have to go up 4 or 5-fold before you had $100 worth of silver, but at least you had something in the coin. But people didn't see it that way, and they turned them in. And I guess if you need the $100, it doesn't matter whether there's $20 worth of silver in them. You need 100 Canadian dollars, so you turn them in, and you can then spend the $100, because the stores weren't taking these coins. It was a bit of a disaster for the Canadian Mint, but I thought it was a good idea. If I were working there, I wouldn't have nixed it. I would have said, okay, give it a try. So I don't know if those coins are collector's items or not. But all right, so the Canadian Mint, the last few years, let's see the drop-off they've had, and it's not as dramatic. It's half, but it's not 70-80%. You can see 2015, that number is misleading because it really was 40 million ounces of silver, but they had to bring it down to 34 million. In 2016, it was at 32 million. And then the last 2 years, they actually, in 2018, they outsold the U.S. Mint. U.S. Mint only had 15 million in sales in Silver Eagles in 2018. And the Canadian Mint outdid them. Now, I don't have the first quarter numbers yet. They only report quarterly, and they report very late. But I'm sure they're probably on par with what the U.S. Mint is. So you could see the dramatic increase in Canadian silver, even more so than the U.S. Mint, because they used to sell next to nothing in silver, and they became a competitor to the U.S. Mint. As you can see, same time around 2009-10, and then leading up to the big peak years of 14, 15, and 16. But they're going off of a base of under 1 million in 2004 and 2005. Let's go back and look at what the U.S. Mint sold in 2004, 2005. You can see the Canadian Mint sold under 1 million, but the United States Mint in 2004 and 2005 was selling, as you can see, 8 or 9 million. So 10 times the amount or more. Well, American Silver Eagles were sold than Canadian Silver Maple Leafs. And how much is all this? Well, let's take a look. Now, the Canadian Mint, like the Perth Mint, historically has been, and same with the U.S. Mint, much more skewed towards gold sales. And here you go. Last year, in total, the Canadian Mint sold about almost $400 million worth of silver. Not bad. Their peak year, 2016, they sold about $780 million. But of course, gold sales in 2010, nearly $2 billion. So you can see on a dollar basis that not as much money is spent on silver than gold, and that's a function on it that they're not selling more units. It's just that unsustainable gold-silver ratio is so high. Now, silver sales have fallen off. Let's move over to the Perth Mint and take a look at their silver sales. Now, there's your silver kangaroo, and that is the bullion coin that has charged sales at the Perth Mint, because the Perth Mint was focused more on putting out limited edition Australian kookaburras, Australian koalas, and other types of wildlife, and they were limited edition. this coin here is a bullion coin, and it's issued in amounts that they deem necessary to meet demand, not to meet a certain mintage number. And this coin is 4 nines. I think so is the Canadian Maple Leaf. The U.S. mint coin is slightly less fine. I think we got cut off when we were talking about the Canadian and the Australian silver kangaroo. We got cut off before I showed you the picture. There it is. That is the 9999 fine silver bullion coin from the Perth Mint that was designed to make up for the shortfall in 2015 due to the selling out of American Silver Eagles and Canadian Silver Maple Leafs. And the reason there was both of those mints, for whatever, they did not have planchets available to mint more coins, but the Australian Mint out in Perth there does, and they decided to take advantage, and rather than ratchet up planchets and ship them over, they decided to stamp their own coins, and that's what they did here. And that actually made the Perth Mint a much more viable competitor for silver sales. As you can see, in September 2015, boom, 3.6 million ounces of silver sold. Before that, they never cracked 1 million. And as you can see, since then, they're a little more consistent in banging out 800, 900,000. I think last month was 942,000 ounces of silver, whereas that would have been, a record before 2015 in September. So the Perth Mint silver sales have not suffered, probably because they sell to Asia, and they've managed to hold up their sales. Now, in dollar amounts, we have the same issue here. I'll give you a longer chart that Nick put together. Mine goes back to 2014. His goes back to 2012. But you can see before 2015 September, it's a big difference between the amount of silver sold. That is clearly a demarcation line between Perth Mint sales. Now let's look at how much in dollar value they're selling. It's very similar to the Canadian Mint and U.S. Mint, obviously selling less dollar value worth of silver. Their biggest year in silver sales was September, or biggest month, September 2015. They sold $82 million worth of silver on the strength of that Australian silver kangaroo. And currently, they're selling about $19-20 million worth. But their gold sales have not fallen, again, to the same extent as the U.S. So they're selling about 35. And earlier this year, late last year, they sold over $100 million worth of gold. So that's your Perth Mint. Let's take a look at the next one. I don't have the Mexican numbers because they're really, really small, and the Chinese silver pandas are also small. So we're going to stop at the Austrian Mint, and they don't have the 2018 numbers yet, and I haven't written to them yet. But you can see they've had a similar fall off. But they had bigger sales, not in 2015, but their big year, as you can see, was 2011 with 17.8 million ounces sold. Again, all these charts are on Smaulgld.com. You can also get your mugs there too. So it pays to visit there. It also pays to subscribe there in case they take this channel down, or who knows. Also, it pays to go over to BitChute, where you can also see a copy of this video. All right, let's take a look at the silver ETFs. Now, silver ETFs form a good portion of silver stocks. And those stocks that are in the silver ETFs, including the SLV, which has about 310 million ounces of silver. And then you've got some other ETFs on this chart. And we're looking at one point in 2016 and 17, total silver stocks held in these ETFs was over 600 million ounces. It's currently about 580 million ounces. And you can see on the chart, though, it's pretty much a hit, so to speak, for investors that want to get exposure to the price of silver. Very hard in most of these cases to get the silver. Even if you can get it, it's generally not economic to do so. I mean, the Sprott physical silver, it's the pink wedges there. You can get silver out of there, but you have to go through a process, and by the time you get it, the price may have changed, and it's not as simple as having vaulted silver and selling it on the spot or having it delivered to you on a particular date here. But there it is, almost 600 million ounces of silver in the ETFs. But I want to show you, if you add in the ETFs and other custodially held silver, like Perth Mint silver certificates, or if you hold silver at different depositories or even Comex vaults, you get over $1 billion. And there is a lot of silver being stored. Look at that. Pretty much at record levels, since only 100 million ounces were held at the turn of the century in depositories, and now we're at about 1 billion ounces are being held. This includes the Comex, so we're going to get to those Comex warehouses, and you can see the value of the silver that's all loaded up in there. If there's 1 billion ounces, well, the price is about $15 an ounce, then you have about $15 billion worth of silver. And you can see that right there, 15, where it is. But back in 2011, when the price was at a high there was, $36 billion worth of silver, even though there was less silver being held. But a lot more silver is being held. You can see it's moving on up there. It's at over 1 billion ounces in those different custodial arrangements, including silver ETFs and the Comex vault. Speaking of the Comex vaults, let's take a look. It's still moving up. The overall numbers are moving up, but the JP Morgan is flatlined. The Brinks has gone down, but Coins and Things has gone up. Those are the three big silver warehouses, Comex approved warehouses. You can see here Brinks down now under, what's up as high as 55 million ounces. It's down to just under 50 million ounces. Remember, this is silver. This is Comex silver. This is silver held in eligible stock form. It's either eligible, and if it is eligible, sometimes they registered for sale. It's in the 1,000 ounce bars. This does not include silver eagles or any other silver items that may be stored with Brinks. It's just what is eligible to be traded on Comex, and they have about 50 million ounces of silver loaded into their Comex warehouse. Coins and Things also now has about 37 million ounces. You can see they go in and out. A few months back last year, they're over 40 million ounces, but in July of 2016 they had about 5 million ounces. So they definitely fluctuate in their warehouse. Now JP Morgan's warehouse, and again, this isn't necessarily JP Morgan silver any more than it was Brinks or C&T silver. This is about 150 million ounces, and it's pretty much flatlined now for just about a year. You could see a big increase when they opened it in 2011-12, steadily increased. But again, this is all silver that is eligible to be traded on Comex. Not a lot of it's registered, but it's not a big deal to get it registered in order to trade it. And here is the total Comex, which includes not just the JP Morgan, Brinks, Coins and Things, but also HSBC and a few others. And there's 305 million ounces of silver, pretty much a record, being held at these various Comex depository warehouses. And a good amount of it, 220 million ounces, 213 million ounces, is eligible. And then there's registered almost 100 million of it. So there's plenty of silver if someone wants to, quote, stand for delivery. The whole idea of the Comex default is complete nonsense, and so is JP Morgan has 600, 800 million ounces because they bought silver eagles. That's none of that stuff is true. All right, now, what does that mean? We talked about the commitment of traders at the start and how they might go long. Now, this was a big story a while back, and I covered it at the time. There was all this silver pumping going on that for the first time ever, the commercials are net long, and this means silver, quote, set to skyrocket, set to launch, and this is it. Now, I don't know if you can follow this. If you can, I'll do the best I can to make sense of this chart here. But those of you may recall, last summer I was talking about this. Look at the top box where it says silver futures commitment to traders, and you have the price of silver represented by the blue line. And that goes back, I think that goes back to, it goes back about 3 years. So you're looking back to 2016, 17, 18. But the place where I've drawn the lines are last summer, 2018. And you see the first red line going down. That reflects a decrease in the price of silver from about $17 all the way down to about $14. But what's interesting about that particular decline is it's pretty much straight down. Now, if you look to your left, even though the price went down, you have this like a up and down seesaw effect. Even though the price is heading down, it goes up and it goes down, it goes up and it goes down. But during that period there, it went straight down. Now, if you look below in the parallel area, as that price was declining, you normally have what they call the commercials and the non-commercials. The commercials being the big banks, and they're generally short their silver. But as the price drops, in order to make money on the shorts, they have to cash them in. And if the price keeps dropping, eventually there's nothing to cash in. And eventually what had to happen was they had to go long. And you can see where I've circled where the blues, which are the commercials, they actually went net long, meaning of the 30 or 40 of them, they were then net 13 long. And you can see that happen. And as I had said at the time, as soon as the price starts to go back up, well, then they'll have to reverse their positions. They'll cash out on their long position and they'll go short again. And then you can see, again, they're down below the blue line. Well, now look to the far right. You can see we've pretty much had not as long yet as we had that decline from June, July 2018 down to about November 2018, a decline. We've had a decline now in silver pretty much since the beginning of the year. If this goes on another month, let's say we get down to 14 or maybe even 13, you'll see those blues move into, and they will be long again. And that's when all the silver pumpers will come out. Historic, the silver, the commercials are long, it's historic, it's never happened. Yeah, it's just because what has never happened before, and I'm going to show you, is the price has never fallen this long in a straight line before until now. It hadn't. If you look at the last summer, how it fell, that was the first time you'd ever seen a fall in silver like that. It's not the most dramatic drop in silver, but it's the longest extended period where you basically went straight down over an extended period, a slow, steady drop in the price. We're seeing something similar to that this year. It's not as long and it's not as steady, but if it carries on another month, we're very close to where the commercials will go net long again. It doesn't mean anything. It just means that's the normal way they're going to trade. I'll show you. Here, you can see it better here. You can see last summer when that the silver line in the middle box is above zero, meaning they're net long. Normally they're below the line. Well, look where they are now. They're moving up close to the line, and that's a function of, you can see again, the price going down on the upper box, the blue, and it's going down. And if it continues to go down, I would suggest that they will eventually go net long again. It means nothing. Now, historically, it is true when they got all excited. I'll show you the historic chart. Never happened before. You can see the entire time from 1987 to current, that in the middle box, that black line never went above zero, meaning there was never a net number of commercial traders that were long. You can see we're moving back up towards that, but it was always below the line. But it meant nothing. It means absolutely nothing, because we had record silver prices in 2011, and look where they were. If you can find it on the chart, you go to 2011. Look at, it has nothing to do with it. It wasn't like when the commercials were long. They weren't in 2010, or then the silver price skyrocketed. In fact, it's actually a bad sign, the way I look at it, is when the price is declining for a long period of time. That's when the commercials realize, heck, we might as well go long here. We're not going to make any money driving it from 14 to 13. We're more likely to make money from 14 to 15. That's why they go long. That's all it is. But that's what you get when you listen to people who want to take every piece of data and make it into something it's not. But let's take a look now at the gold-silver ratio. And this explains why they may go long. Because when the gold-silver ratio gets this high, it's generally because the silver price is falling faster than the gold price. The gold-silver ratio goes down when gold rises and silver rises. And silver rises a bit faster than gold, so the gold-silver ratio contracts. But in this case, as gold is drifting slightly lower, silver is kind of falling a bit more gradually. You're getting an increase in the gold-silver ratio, which means that the price is falling greater than the price is falling on gold, and that would make the commercials eventually realize there's no money to be made going short. But there's your 1 year chart, the unsustainable gold-silver ratio. Not going to get into my whole explanation again. Those of you who follow this channel know that anyone who tells you the gold-silver ratio should be 16 to 1 or 15 to 1 based on historic, there is no such thing. Those are all government-mandated ratios when there was gold and silver both part of the financial system. That hasn't been the case. The gold-silver ratio 16 to 1 or 15 to 1 for over 100 years. Here is the gold-silver ratio for 5 years. All during this period of time, silver pumpers telling you unsustainable, you got to buy. It's never been this high. It's going lower. And there you go. It just keeps hitting higher and higher. And here's one more, the 10-year. I'm not going to show you the 100-year because it shows you the same thing. But you can see, only in 2011 it got to about 32 to 1. That was because of the big spike in silver in early 2011. And then it immediately, when it was all over, that spike was over, you've done nothing but go straight up for the last 9 years. You can see since April 2011, when it was 32, it's gone on a slingshot from 32 to 1 up to 88.45 to 1. And finally, before we get to your questions, here's that owners per ounce. It's another one. Comex default. There's no silver at the Comex. China is going to stand for delivery, and then it's going to be game over. And okay. But here is the amount of silver that is registered and available to trade on the Comex. Take you through the chart. Top box is the price of silver. The second box tells you how many contracts are outstanding. Each contract is 5,000 ounces per contract, so there's 1 billion ounces of outstanding contracts. The third box tells you how much silver is registered in order to be delivered against those contracts if they so desire. And that's about 92 million ounces, as we mentioned. And that means that for each contract that's out there, there's about 11 ounces. There's about 11 times less amount of silver per contract. So they call it owners per ounce, 11 to 1. But it sounds bad. That's not really that bad because in the past it's been close to 50. But the better way of looking at it, I think, is looking at the total amount of silver that is in the Comex vault versus the contract. Follow the same thing from top to bottom, and you're down to about 3.4 to 1. There's more silver backing the contracts than there is cash backing your bank account, physical cash. So when people get all excited about this, it's criminal, it's Crimex. This is not the criminal or the manipulative part, because in most cases, people that are trading silver are not there to buy it. If they were, for example, if you were to order silver from any of your silver dealers, and you order a monster box, and they don't have a monster box. They've got 200 ounces of silver. So they say, we'll send you 200 ounces of silver now, and when we get the other 300, we'll send it to you then. Well, that's criminal. They're selling something they don't have. That's not really what the case is going on with Comex. The real issue with Comex is not that there's not enough silver there. They have enough silver on hand to meet the traders' demands. And if they didn't, the contracts can be settled in cash. So no one is defrauding anyone by that. The fraud occurs in the manipulation and in perhaps the naked shorting and the spoofing. There's where the problem is. When people focus on this is a red herring. Because in a trading situation, where they know 99%, 95%, at the lowest 92% of the contracts are not interested in taking physical delivery. There's no even, it's not even close to even worrying about there not being enough silver to match the contracts when, in fact, there's 305 million ounces stuffed in those Comex vaults. So the real issue with Comex, from my perspective, is not that there isn't enough silver there one-to-one. It's the fact that they can manipulate, just like they manipulate any market, Forex, and happens in all the markets. Equities markets, front-running, spoofing, naked shorting. All right, well, that's it for silver. I think there's a lot of information there. Go to Smaulgld.com. We want to see all of the charts. If you've enjoyed this presentation or some of the other presentations, or you want to continue to enjoy the presentations, please consider becoming a Smaulgld patron or becoming a Smaulgld Mug Club or Mug Stacking Club member over at Subscribestar, or consider making a one-time donation via Bitcoin, Litecoin, PayPal, or sending a check or items of small value to Smaulgld LLC, P.O. Box 714, Dover, New Hampshire 03820. Also on PayPal, you can do a recurring donation as well. All right, let's get to your comments. Let's see what you guys have to say. Philip Quinn says, greeting game changers. All right, and Joe is here. I haven't seen Joe in a while. Chicago Electric Bicycle, I haven't seen him in a while. He's here. Pablo is back. Swamp Fox, howdy from the silver stacking capital of the swamp. Where is the swamp? Prashanti Girl is back. Getting some of the regulars who've missed a couple of days back. All right. Smaulgld, what if JP Morgan came out with a cryptocurrency stablecoin backed by their 100 millions? First of all, okay. Everybody keeps talking about like it's a fact that JP Morgan has all the silver. They don't. There is no evidence whatsoever that JP Morgan ever bought hundreds of millions of silver eagles and melted them down, or Canadian silver maple leafs. That's all fantasy. The only silver you can even possibly say might belong to JP Morgan is what we just showed that's in the Comex warehouse, and there's no evidence that they hold title to that silver anywhere on any of their financial balance sheets. So it's not even worth entertaining this nonsense that JP Morgan is 400, 500, 600, and they are stacking silver, and that is why I'm buying silver. It is a complete concoction. But anyway, I get what the question is, though, Chicago. I'm not belittling you. I'm belittling this idea that this has been touted out there as it's some kind of fact, and it's not. But what if, let's just say, what if an entity were to purchase a lot of silver, say 100 million ounces, 200 million ounces, and come out with a cryptocurrency stable coin? Well, first of all, it wouldn't be stable. It would be as stable as the price of silver, which is not stable. What all the stable coins are today, they try to replicate the dollar. They either back them by an equivalent amount of dollars, and it's not just Tether. Coinbase has one, Gemini has one, Goldman Sachs' Circle has one. What they do is those ones are regulated by the New York Financial Division, and they have a BIT license, and they have to have FDIC bank accounts. That's a stable coin. And the reason that these companies issue stable coins, and what JP Morgan is going to do, is that when you're done with a trade at JP Morgan, you're trading bonds, stocks, and you want to cash out, rather than cashing you out into fiat and then sending the money to your bank account, they leave it in a coin that represents a dollar. And then if you want to start trading again, you just flip your coin. There's some efficiency in doing it that way. That's what the crypto exchanges do as well. You sell your Bitcoin and you don't take your cash. You just leave it there as a stable value until you can make another entry point to trade. Now, so it wouldn't be a stable coin, but you can. There's nothing stopping anyone buying silver and then issuing, instead of certificates against that silver Chicago Electric Bicycle, issuing tokens against it. But what would be the advantage of that? It doesn't increase the value of the price of silver. Silver is silver. You could put any asset on the blockchain. It doesn't make it more valuable. I could take, they do this with art, they do this with tea, they can do it with oil. You can do it with any commodity. You can take equivalent amounts of silver and issue, instead of you could do it by ounce. Each token equals 1 ounce of silver. And instead of buying 100 ounces of silver from SD Bullion and having it sent to you, or instead of buying 100 ounces of silver and storing it in a vault somewhere, you would buy 100 ounces of silver and they would issue you 100 tokens of silver. Now you have 100 tokens of silver in your trading account, and now you can trade them. Presumably, you have to trust that those 100 tokens of silver actually have 100 ounces of silver backing them at some vault. But that arrangement in itself doesn't change the price of silver, doesn't change anything. I mean, it's no different than an ETF, other than instead of trading shares in your ETF, which represent a certain amount of silver, you're trading tokens. So a lot of people are saying, well, that's going to be the real. I don't think they understand cryptocurrencies. They say, oh, wait till they do a gold-backed cryptocurrency. I don't know what that means. It just means that you're taking your gold in a digital form. It's not going to change the value of the gold. It's just it's digitizing the gold. And in fact, if the reason you have silver or gold is in the event that there's a blackout, an EMP, a financial crisis, what's the advantage of having your gold or silver in digital form? It does not increase the value of the silver. All it does is it makes it easier for you to transfer it. Okay. All right, presented girl, good news. Yes, the left lost the federal election. That's in Australia. I haven't followed that. I heard, yes, it was a Hillary moment. All the polls and media said the left would win, and they didn't. Yes. Where's Barry? Still waiting on the Smaulgld silver rounds. Just found some Q ones. Yeah, I've got to find somebody who will make the coins at a proper price, and then I will do a Smaulgld round if anyone wants to help scout out and get me. Well, I don't want to collect people's money and put it in escrow, and I don't want to lay out a lot of money and then be stuck with 50 coins. I have to come up with a way, someone who's willing to. Some mint that would be willing to make, I don't know, 50 to 100 of them, and then be able to sell them at a decent price so that no one loses any money and we all get a souvenir. But that's all those coins really are, because they're not going to, they might appreciate in collector value, but the fabrication charge on a mini mintage like that is going to be expensive. Oh, Trump got a Donald Trump silver ounce round. I saw those are kind of interesting looking. All right. What else do we have here? Chicago Electric Bicycle manipulated silver prices, killing silver miners. Absolutely. Like Hecla. Yeah. They were once a silver mining powerhouse. What about Nevada? Nevada used to be the silver capital of the world for a while. All right. Chicago Electric Bicycle. Real estate is big time overpriced here in Chicago, I could imagine. You got $1 million condos, just a few blocks of some really violent ghetto neighborhoods. Yeah, it's surprising that Chicago, even more surprising, San Francisco, how high the value of real estate is there and in Seattle. And then you look at what I would imagine is a quality of life issue when you have homeless, you have crime, supposed feces in the street, and you just wonder, how do they maintain those housing prices at those types of neighborhoods? All right. Where's Barry? Smaulgld, the gold silver ratio ever been 100 to 1? Yes. I don't have the chart with me, but I think it was in the 50s. It has been as high as 100. All right. What else do we have? Pablo, Smaulgld. Did you hear about the Central Bank of Canada sold 1.2 billion U.S. paper? Did you get a heavy order on mugs? You know, you guys got to order some mugs if you're mugs. See, if you call yourself a mug stacker and you only have one mug, you're not really a mug stacker. You have a Smaulgld mug. You want to stack mugs. All right. Sup, Mugger says, where's Barry? I'm still scrolling here. It's interesting. The longer comments are the ones that grab my attention. Actually, what I'm looking for is Smaulgld. There we go. Prashanti girl. Amazing info, Lewis. I need to send you a Litecoin. Well, that'd be nice. Thank you very much. And by the way, I mentioned this the other night. When you one of the reasons I think that the cryptocurrencies are going to take off is just millennials are used to doing things on their phone. They tend not to like to own physical items, but when you want to send money, so to speak, and if you look at what you're looking at on the screen, as I mentioned the other night, you can send, and people do, checks and coins and things in the mail to me from time to time. But that takes time, and as I mentioned, it's a very thoughtful thing to do, and it's very much appreciated. But the fact that you have to do that means you're less likely to do it, just because. But when you can hold up your phone, if you have $25, $50, $100 of Litecoin or Bitcoin or whatever loaded on your phone, you just open up your wallet, you hold up your phone and you type in the amount you want to send to the QR code, and boom, it's done. And I think that convenient value is really why cryptocurrencies, and just digital currency, it doesn't have to be cryptocurrency, it could be dollars, you can use this with Cash App or whatever, are superior as, quote, currencies than gold or silver, because they're more divisible, more portable, and they're faster. See, gold and silver were money because they were desired for what they were, but they were also really cool because nothing else like whiskey or coffee beans or whatever could last as long, be divided, be carried around and traded. But with digital, you can trade a lot faster than silver. So what Chicago Electric Bicycle was talking about was bringing silver or even gold into putting it on the tokens in there. We got cut off again. What I was saying is that to Chicago, let's say Chicago School of Economics, but to Chicago Electric Bicycle's point, adding gold and silver and tokenizing them isn't going to increase the value of the underlying gold or silver. But what it is going to do is even the playing field between digital currencies, cryptocurrencies, dollar digital, with gold and silver, because gold and silver have lost their edge as a transactional currency, because you can't really divide gold coins to buy milk. If you have even if a 10th ounce coin, if it's worth $150, how are you going to make change with it? You got to carry it around. Or what if you wanted to spend $10,000 and you want to use silver? You can't lug that around. And you can't buy stuff online with gold or silver. So when you tokenize gold or silver, it actually levels the playing field so that gold and silver can be spent, and it updates their currency. It updates their ability for it to be divisible, widely acceptable, because you put it on a credit, like a debit card, a silver debit card, gold debit card. But again, that's not going to increase the value of the gold, other than it might be more value. It can be more valuable for transactions, but less valuable because you don't have it. So I think it's a wash. I don't think it's going to raise the price of the gold or silver. All right. Anything else here? ASMR people. I haven't seen them in a while. Lifestyle people. My opinion of UPS, I guess, and FedEx is a bit flawed, but a couple of people I personally know work for both. 50% of the workforce are no-benefit temps who work 35 hours a week. Well, that's not surprising. All right. Phil McCain, Smaulgld mug to silver ratio. That's close to 1-to-1, maybe less. Now, the mugs are more valuable than an ounce of silver. Mugs are $19.99 and $23.99. At one point, remember when Litecoin went down to $22, we were on parity on the mug to Litecoin ratio. Now Litecoin is, I don't know what is Litecoin right now. Litecoin, looks like it's 86. So yeah, there's definitely an increase in the Litecoin to mug ratio there. I mean the mug to Litecoin ratio, and that is all I need to know. Says Philip. All right. Jack, Smaulgld, with the current mug to silver ratio being 1-to-1, are you sure you're not working for JP Morgan manipulating the price of mugs down? No, but you see, JP Morgan, they bought 500 million mugs. Yeah, they did. And they're going to let the price of mugs ride. Who believes this stuff? People believe this stuff. That's what's funny about it. And then China is going to stand for mug delivery. And it's going to be game over. Yep. I'm cornering the mug market, indeed. Jack made a good analogy. Oh, yes, Pablo. Okay. All right. Well, I want to thank everyone for joining me tonight. And tomorrow, remember, join me for Solid Gold Sunday with Smaulgld. If you got any gold questions you want answered, I haven't picked the topic yet, but I'll probably do that sometime tomorrow. I will do solid gold Sunday with Smaulgld. Monday will be mugging for life, and we'll do the news. We'll catch up on a lot of stuff there. So, thank you very much, and we will see you tomorrow. And if I'm going to have Bernie give you a 10-second countdown, and if there's no other comments or questions, we're going to say goodnight. All right, Bernie, take it away.
All right, so I'm going to give you the 10-second countdown, so let's go. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1%, 0. Have a good night.